Hi, good afternoon. My name is Eric Levinson, Head of Business Development for VinaCapital. I'm here with Andy Ho, Chief Investment Officer, Con Vu, Portfolio Manager of the VinaCapital Vietnam Opportunity Fund. Would like to thank David Harris and the team at Cadarn Capital for organizing this call. We're here this afternoon to report the audited June 30th results for VOF. We look forward to talking about some recent developments and also importantly, providing an outlook for the portfolio. Now, 2022 was a very challenging year. 2023 has started off pretty strong. The last couple of months have been some challenges as well. So Andy, first question is, let's just go right to it. Real estate, which has been kind of a problematic sector in 2022, has been a little bit better in 2023, but people still kind of look at it skeptically. Second largest weight in the portfolio. What's your view on real estate now?
Well, you're right. Real estate makes up a large component of the VOF portfolio. We continue to be bullish on real estate simply because it is a core part of the growing domestic economy in Vietnam. As people get wealthier and wealthier, they are going to move out of their family home and purchase new homes, particularly in the low to mid-income level. You will see in these types of frontier/emerging market, you will see volatilities from time to time in the real estate space. We saw that in 2022 because of the tightened liquidity and higher interest rates. But since then, the market, the economy has loosened the liquidity significantly. The interest rates have come down quite significantly. And we do foresee a turnaround in the real estate sector. And in fact, in the secondary market, we're beginning to see prices rise. And hopefully, in the very, very near future, the primary market will open up and start to have significant sales from property developer again.
Yeah, and we have seen that in the conversations we're having with the banks and the RMs. We're seeing that rates got, I think, lowered 4 times. And mortgage rates weren't immediately coming down, but those are starting to come down and now. So there's definitely more interest. Now turning over to you, KV, in earlier in the year, we had some, I guess you would call them downward adjustments to some of the holdings in the portfolio. Pleased to say that we've recently had some upward adjustments that was effective early on in the month. So can you please speak about those upward adjustments, maybe when they occurred and why they occurred and what gives you confidence in the portfolio?
Thanks, Eric. And as Andy mentioned, with regards to the portfolio, we saw in November and in December last year downward adjustments to specifically some of the real estate investments that we had held in the portfolio. And those adjustments reflected the conditions of the market at that time. You can see, that during that second half of the calendar year, or the first half of our financial year, it was very volatile, both in the wider market and specifically within the real estate sector. So those adjustments downwards over $50 million reflected that. Now, fast forward the clock to 30 June, and over that 12-month period, we've been updating the market, the efforts that we've been making in terms of renegotiating and restructuring several of these investments. The valuations at 30 June today reflect the uplift in some of those investments, as well as uplifts in some of the private equity investments. So in early October, we announced to the market a $54 million upward adjustment in value. Within that, half of it, or a little over half, results from the private equity investments, and we'll talk a bit more about those activities later in the call. The other balance is with regards to the real estate investments to reflect the improving conditions that Andy's talked about.
Yeah. It's so interesting. So Andy, as you think about this, when we've talked in previous calls, we talk about how with all of our private investments, you and the team are able to negotiate downside protections. When Con talks about the adjustments upward, does this kind of validate the entire strategy in terms of why we're able to negotiate downside protections and really the secret sauce of the Vietnam Opportunity Fund?
Yeah, I like to think so. I think if we look at the historical track record of our PE investment, particularly on the ones that we have realized, if we look at from the beginning until now, we've delivered a 21 to 22% gross IRR in terms of US dollars. If you break down the period of 3-year block or 5-year block or 10-year block, and you look at the annual return of the VN index, you'll see there's a range between 5 to 12% annual return. So clearly, the activities that we've done in private equity have demonstrated a higher return. Now, I think what's more important is, as you know, a lot of our private equity investments do go on and become listed companies, and we continue to hold on to them in our portfolio. And what I like to say is most, if not all, of those investments, we didn't have to exercise our downright protection. And as a result, naturally, these are high-quality companies that we, or the public equity component, have inherited from the private equity investments. And so, in effect, what you'll get by participating in VOF is a portfolio of high-quality listed companies as well as private equity investments with downside protection.
So, you know, it's funny, you talk about, actually, I'll just, to everybody here, the one thing I forgot to say is I've got the iPad here, so if there are questions that you have, please type them into the chat function. Hopefully we'll get to all of them. If we don't, we can certainly answer them individually. So Andy, one of the things we've talked about in the past is you really liken the Vietnam Opportunity Fund to kind of similar to very much of a Berkshire Hathaway approach, where you buy great companies, great management teams, and own them for decades plus. I mean, would you agree with that?
Yes, we tend to enter these investments with a long-term view. Again, the market is a frontier/emerging market or a developing market, and we expect a lot of volatilities in the short term. But we do see an economy growing at 6 to 7% per annum, a population reaching 100 million people, 60% plus or less than 35 years of age. It is a growing population in terms of wealth and in terms of spending power. And that is a tremendous boost to some of the sectors and the investments that we've made over the last 5 to 10 years. And so it's going to take, it's going to be it's a long-term play, because it takes not only the short term, but in the long term to absorb those value and the growth that we see today.
So, you know, these fundamentals that you've mentioned, the long-term secular trends, obviously VinaCapital, we're sitting here in Ho Chi Minh City, we're not the only people that have seen these. And so recently reading about Bain Capital coming in, KKR has been in here for years, there have been some other players. Are you hearing, are you competing? I'm not sure if that's the right word. Do you see 2024 as more of the US-based or global PE firms are going to come into Vietnam and say, can I get access to this growing market?
Yeah, and I hope so. I think with the recent visit from President Biden and the elevation of Vietnam to a comprehensive strategic partnership level, I think there's a huge recognition between the relationship between Vietnam and the US that will instill a significant amount of confidence in US investors, from private equity shops to hedge funds, and most importantly, to some of the multinationals that come out of the US. So that's going to bring confidence as well as investment into Vietnam. And that's a great thing for Vietnam, because it allows a lot of businesses to continue to grow. It creates wealth in the country. I don't think that's competition for us. In fact, I view some of these folks coming into Vietnam as our exit strategy. Yeah. I think a lot of multinationals would rather acquire the great businesses that we've entered rather than grow their businesses organically.
So let me follow on that. So recently, we've seen a couple of notable transactions, primarily in healthcare. There have been some acquisitions of some very well-known hospitals. VOF is one of the largest hospital and healthcare investors in Vietnam. Should we expect divestiture in 2024, or are you looking at deals and are you able to command maybe a premium because there's just fewer quality assets left?
Yeah, so we are one of the largest, if not the largest, healthcare investor in terms of hospitals in Vietnam. We have 2 healthcare platforms, one in the south and one in the north. And we do constantly get asked by global investors as well as strategic investors whether we're interested in bringing them on board as investors or selling our stake to them. At the moment, we are considering all options. However, the team is primarily focusing on building out the platform. In other words, they're making acquisitions. So about 2 months ago, the Southern platform bought the 8th hospital. The northern platform today has an outstanding term sheet to buy another hospital. So the focus for the team at the moment is to continue to grow up the platform and hopefully enjoy a bigger premium, a more scalable premium in the next 1, 2, or 3 years.
Excellent. So we've talked about real estate already. We've talked a bit about healthcare. Con, what else has gone on in the portfolio that kind of people should be understanding, people should be excited about?
So it's certainly been a busy year for us. We've talked about the efforts and the efforts around restructuring and addressing the real estate portfolio. But actually, we've been very busy looking at other things as well. So specifically on the listed equity side, as the market has improved into 2023, the early part of 23, we actually took that opportunity to divest and trim down some positions and raised about $73 million approximately from that divestiture activity. Similarly, we've taken some of that proceeds and invested. And if you look actually on the private equity side, we've been really busy there as well. In April this year, we announced an investment into one of the largest digital advertising platforms in the country, Chisel on Media. We've talked about this before, but it's a great business, has over 70% of market share, really has the attention of eyeballs for consumers as they go into lifts and buildings. We've also had an opportunity, as Andy mentioned, to do a roll-up strategy on some of the healthcare platforms. So alongside the recent bolt-ons to the Southern platform, we've also done a roll-up and consolidation exercise. And also, during this time, we've actually been able to trim or divest some of the private equity investments as well. That activity obviously has continued to after the financial year as well, and we'll certainly can talk more about that.
Okay. So Andy, as you think about the next 6 to 12 months, what do you think is very exciting about the market and, importantly, the portfolio?
I think from the three areas that is exciting to us right now, one is the capital market. I have to admit the valuation is really inexpensive compared to historical ratios, yeah, and compared to a regional average, and also compared to the potential EPS growth that we're going to see, we'll hopefully see in 2024. That's one. And two, there is a significant amount of focus, I think, out of China, diverting the focus out of China into places like Vietnam, India, Japan, etc. And I'm so excited to see that capital flow coming into Vietnam. And hopefully a lot of it will come through VinaCapital to manage. That's definitely what we want. And the third thing it's always exciting to us is as more capital flow into Vietnam, again, we would have a more solid exit opportunity for some of our larger holdings. Our holdings tend to have veto rights, some sort of rights, even though we're minority shareholders, some sort of rights to allow us to have a sense of control over the company. And I find at times a lot of the strategic buyers appreciate that right, and because of those rights, we can adhere to or sign up to the reps and warranty that they often ask for.
Okay. Now, I know that not everything is always perfect, not everything is always rosy. You're always talking about the three risks you have in your pocket. They probably have changed a bit over the last 6 months. So what are the three risks that you're thinking about in terms of managing the portfolio and making sure your team is laser focused?
Yeah, so the three risks right now, and it's always in the back of my pocket, and obviously a lot of people are concerned about this, and this is the geopolitical events on a global basis. It can create a situation where a lot of investors become extremely conservative and less likely to deploy money. And as you can imagine, as U.S. interest rates go up to 5% today for long-term treasury, it's becoming a lot easier for them to hold on to these types of safer assets. So the risk is that these geopolitical events drag on and the interest to invest in developing markets has lessened. For the country, the risk that we have at the moment is, I have to admit, the FX. It is a concerning, the local currency has devalued roughly 3% against the US dollars. And I think the concern is maybe it's not so much about Vietnam, but the fact that the US dollar has strengthened so much over the last 12 to 18 months. And Vietnam is the risk is that Vietnam will...
And we lowered rates while at the same time they were hiking rates as well.
That isn't helping, is it?
Yeah.
If we're lowering rate, that folks like yourself and myself and the domestic investors are less interested in holding on to local currency. So that is a concern. And the third concern that we have is, although we do want to see a 25 to 35% EPS growth for 24, and then around 20 to 25% growth for 2025. We have to admit that a lot of events may cause the earnings growth projections not to come to fruition. Yeah. And some of it could be, as related to last year, the lack of orders from the United States and Europe because we had too much inventory, or going forward, a potential recession in the United States or Europe that weakens the demand for Vietnam-produced goods.
Well, but at least if there is, then at least rates will start coming down again. So there's some positives there. All right. So with that, we'll transition now to the audience, and there's already a couple of questions that have come in. So I will just put on my eyeglasses so I can read. Okay. First question, kind of a follow-up, I suppose, which is I watched the presentation from your chief economist, which is Michael Kolari, from our investor conference. He seems to be very bullish. He's talking about the benefit of the U.S. partnership, and that's something it looks like they don't get a lot of press about wherever this person is located. Are you as bullish as Michael? Because he's very bullish on the economy the next 3 years, not just kind of next year.
Well, I think I did mention this earlier. When Vietnam has elevated the U.S. to this level of strategic partnership, and the U.S. recognizes Vietnam as a great place to invest, it does create a sense of confidence in U.S. investors and U.S. corporations to deploy money in Vietnam. So with that, I do think in the next 2 or 3 or 4 years, we should get more, at least foreign direct investments, more money from folks like Intel coming to Vietnam. And so that's only goodness for the economy.
Okay. And second question here is, you mentioned this as well a little bit. So obviously, kind of, it looks like all the news out of China continues to be negative. We read about Country Garden. We read about basically anything that we see out of China is negative, whether it's politically or economically or in the real estate sector. Are the real estate problems that Vietnam had and is kind of working through analogous to China? And then importantly, is what's happening in China now negative for Vietnam? Is it, we talk about Vietnam, China 20 years ago. Is this, is it the same?
I think there's two factors that we need to consider for the challenges that real estate has faced in Vietnam. One factor is the lack of liquidity. We mentioned earlier the lack of access to capital or the interest rates being high. This is a global problem, not a Vietnam problem. Whenever a market tightens liquidity, real estate tends to get hit first and quick. And so China saw that, and so did Vietnam. The second factor we need to consider is the supply and demand. At the moment, our chief economist believes that the supply for at least the low to mid-end inventory or housing is significantly below demand. Yeah. Whereas in a place like China, I believe he's mentioned anywhere between a 20 to 25% vacancy rate. In other words, the supply surpassed the demand significantly in a place like China, and as a result, people may have overbought, they have speculated in real estate, and now they're having a difficult time selling the units, and so it's even harder for real estate developer to develop new units for them to sell. In Vietnam, when the lack of liquidity problem has been solved, and the other problem that we need to solve is in Vietnam too, and the government's working through this, is the zoning process. If they solve the zoning process quicker, which the government recognizes that they need to do, then at least the development of the low to mid-end products will be absorbed quite nicely, simply because the demand outstrips the supply significantly.
Yeah. Now, Michael's not here, and I may get this wrong, so someone correct me, but Michael always talks about the Gershon-Korn method or something like where basically China propped up their economy. I think 24% of GDP growth was real estate. In Vietnam, it's less than 8%. And so it really isn't analogous per se, but so we get the question all the time, which is what's happening in China, Vietnam, and to your point, very, very different. We still have really a lack of supply. Here's a question that just came in. Now we're talking about the financial results through the end of June. This question, Con, will go to you, but it's more about the fact sheet that just came out. It looks like we're recategorizing some of our holdings, at least on our fact sheet, from unlisted to listed. Can you maybe talk about the recategorization, and then is that changing how we build the portfolio, or is it just changing how we're reporting what we're doing?
So thank you, Eric, and really two things to say. One, the purpose of that was to simplify, and two, it doesn't change what we do.
So what was the change?
So essentially, if you recall, we've been, this year, VOF is 20 years old. We've made over 200 investments in this fund during that time. Many of those investments are in private equity, some are in privatizations or the equitizations of state-owned companies, others are in pre-IPO, and some stock listed on some stock exchange, the junior stock exchanges. For a time, it was helpful for us to label some of those investments in unlisted, but essentially they were listed. They're mark to market, they're tradable, they have a daily mark. So just to make things easier, we've simply reclassified those upcom or those OTC investments into listed equities. So today, really in the portfolio, you see one bucket for listed equities, one bucket for private equity, and one bucket for the public equity with private terms. These very investments that we talked about earlier, where we're going through some redemption or restructuring process. So just to make it simplified. It doesn't change how we approach. And I think as Andy mentioned earlier, we've been doing this for 20 years. Our approach, the strategy, how we look at terms, how we negotiate, how we get involved in businesses, how we align with management, good teams, that doesn't change.
Yeah, and so even though I think the portfolio is roughly through the end of September, almost 75 or roughly 75% public equity, the bulk of those entrances came through private equity, correct?
Absolutely, and you've seen in an earlier slide, and we can certainly share again, if you look at the portfolio and instead of looking at sort of the classifications that we currently publish every month, you simply shift your lens and you say, how did you enter these positions? And we've run this analysis over 5-10 years, and on average, 80% of this portfolio, regardless of where it sits today, 80% of this portfolio was entered through some privately negotiated means. The very investments that we talked about that we've made this year, in the private equity space, they reflect that ongoing strategy and approach.
Excellent. So Andy, a question just came in, not surprising, we usually get one of these. Hasn't been much noise lately about politics, so I guess there's been fewer headlines in the last couple of months. Any comments on politics and what you see within Vietnam right now?
I suppose fewer headlines is good, right?
I think so, but I guess maybe I'll add some flavor to the question that just came in. U.S. strategic partnership, then we just saw that Chinese leadership may be coming to Vietnam. So, Don Lam, our CEO, talks about Vietnam as bamboo diplomacy, where we go back and forth, we bend, but we're still strong. So
the root is strong.
The root is strong. So how do you see Vietnam continuing to stay in the middle?
Well, I had a chance to host a dinner between the Prime Minister of Vietnam in New York City a few weeks ago with the heads of Citigroup, Goldman Sachs, Blackstone, Warburg Pincus, etc. And the message that we're hearing from the government to global investors, particularly the Vietnam government through the Prime Minister, next to him was the Ministry of Finance, the Ministry of Planning and Investment, so the key folks. The message from them is that they want to motivate foreign investments, whether it's direct or indirect, and they are going to promote and develop the infrastructure, the regulatory framework in order to encourage foreign investment for the long term, and primarily on the FDI side. And to that effect, it seems like a lot of the political noise have abated significantly over the last 6 to 12 months. And I think it's really because the government recognizes that this is not good for business. And they want to encourage foreign investment for the long run. They must be in a situation of creating stability, not only on the economic front, but for the political front.
All right, cool. Okay, so one more question just came in, so we'll go back to you. So financials, at least through September, I don't know the June number off the top of my head, but financials through the end of last month, end of September, were the largest weight in the portfolio. Banks, obviously, I guess some are great, some are less great. What's your view on financials, and then maybe talk about a couple of them that are in the portfolio today?
I think in this environment, we have to be very discriminate, whether we participate in the financial sector or real estate sector. The exposure that we have, I want to say that we have exposure to the highest quality financials, including ACB, including VP Bank, which recently, last week for that matter, formally received approval to allow SMBC to invest $1.5 billion for a 15% stake of this bank. So again, we like the financial sector, but more importantly, what are the specific holdings that we have, and what is the quality of growth and the balance sheet of these banks going forward? And I would like to believe that what we're holding on is top notch.
Okay, terrific. Well, that concludes it. If there's any questions that are coming in that I'm not seeing right now, please let us know, and we'll get back to you. I'll also mention on behalf of Andy and Con, they presented a few weeks ago at our investor conference. That video, along with the video presentations from Michael Koklari, our chief economist, as well as an interview we did with Hui, the chairman of ACB, are on our website, VinaCapital.com. But on behalf of the team, thank you very much, and we appreciate your support.